Thanks for joining us today and welcome to the Financial Data Exchange's quarterly webinar series. My name is Tom Carpenter and I serve as the Director of Public Affairs and Marketing for the Financial Data Exchange. The goal of these webinars is to explore issues pertinent to consumer permission data sharing and the financial services ecosystem. For those of you unfamiliar with the Financial Data Exchange, or FDX, we are a nonprofit organization dedicated to promoting a secure, common, and interoperable industry standard for financial data sharing. Our members include financial institutions, fintechs, consumer groups, industry associations, financial data aggregators, and many other financial services related companies and organizations around the world. Put simply, FDX is seeking to transition the financial data ecosystem to the secure and consumer-centric FDX API standard so that consumers can share, use, and leverage their own data in a much more transparent fashion and without having to share their login credentials. If you're not yet an FDX member, we would love to have you join us. The FDX API spec itself is free to download, and for more information, please visit our website at financialdataexchange.org. Also, please be sure to follow us on Twitter at FDXorg and on LinkedIn at Financial Data Exchange. Now on to today's webinar. The global discussion around open banking or open finance has never been hotter. Lately, it seems that a new article or study on the topic is released every single day. And many different jurisdictions around the world are considering how they are going to address open banking or open finance. And while there are a myriad of different industry-led, regulatory-driven, or hybrid approaches to the different issues related to open banking, one key element of open banking remains the same: the need for technical standards to ensure that consumer control, security, authentication, connectivity, and user experience are consistent. Yet despite this universal need, there are already many technical standards out there. This conundrum is the background of today's webinar: destination interoperability, API standards, and open banking. So what does this mean? What are the different aspects of technical data sharing API standards that should be interoperable? How do they work together, and how do they work separately around the globe? One analogy that may be helpful in thinking about this topic is the image of a cargo truck carrying a standardized shipping container across international boundaries. In using this analogy to think about the different elements of technical standard for the different elements of a consumer data sharing standard, we can observe the following. The engine of the truck is like the security and authentication layer of consumer data sharing. It involves, just like an engine, a technical standard with a lot of component parts working together to provide the consumer with secure data sharing and to authenticate the consumer accurately, even if the consumer doesn't know what each part does on its own. As you can see from this graphic, HTTPS, or Hypertext Transfer Protocol Secure, is like the fuel injection system of a truck engine and is the primary protocol used to securely send data between a web browser and a website. Another component of a standard, like a truck engine, TLS, or Transport Layer Security, is like the engine manifold, a cryptographic protocol designed to provide communication security over a computer network. JSON is another part. JavaScript object notation is perhaps like the internal combustion valves of an engine and acts as the open standard file and data interchange format derived from JavaScript that uses human-readable text to store and transmit data objects. And finally, one of many parts, FIDO, or Fast Identity Online, might be like the ignition system and acts as a standard for biometric authentication. Bottom line, there are a lot of engine parts to security and authentication, but they all work together seamlessly in a technical standard. Back to this graphic. The shipping container on the truck is carrying is like the data payload element of a consumer data sharing standard. It represents a standard package of data elements that the consumer is able to permission and use for a given purpose. In a similar manner, the road in this analogy is like the connectivity element of a technical data standard. It ensures that the truck can drive anywhere it needs to go without needing to change its tires or the type of truck that is used. In our globally connected world, with consumers traveling all over during normal times, consumers expect that data sharing and fintech applications should work anywhere they go. The experience of the truck driver in this analogy, is the ride rough or smooth? Is the truck functioning normally? Is like the user experience element of a consumer data sharing standard. Its goal is to provide consumers everywhere with a consistent and transparent process for enrolling with a fintech app, being authenticated at their data provider, and permissioning their data for a desired use. Finally, the speed limit sign in this analogy represents the regulations and laws of a given jurisdiction that a consumer data sharing standard must accommodate. Is the speed limit shown in miles or kilometers? Or are there local prohibitions or restrictions that might dictate how the truck is able to operate? Thankfully, and because we all need more than just a simplistic truck analogy to understand these challenges and opportunities of global interoperability for consumer data sharing standards, I am thrilled to be joined by a terrific panel today who will help us further unpack this topic. And I want to introduce these panelists before we get started. First, we have Rami Thabit, Vice President of Digital Product at the Royal Bank of Canada. Next, we have Amy Ferguson, a Product Manager at Xero and coming to us from New Zealand. I should have mentioned Rami is coming to us from Canada. And finally, Hugh Davies, who's the co-founder and Chief Commercial Officer of Ozone API and is coming to us from the UK. So we have truly a global panel today. Thanks to all of you for joining in many different time zones and really looking forward to our discussion. As I mentioned earlier, at the conclusion of our program, we will have time for some audience Q&A. So please do send that to me privately in the chat and we'll hopefully get to those questions. Let's dive in. Panelists, thank you. If you can unmute yourself just to make sure that you are ready. We'll start with a question for the group, and Amy, I'll let you lead off. The title of our webinar is Destination Interoperability. I'd love to know how you think about global interoperability when it comes to technical standards for consumer data sharing, and how do you frame this up? What are some of the top items that come to mind? Amy, let's start with you, and then we'll go around to our panel.
Sure, thanks, Tom. I guess I'm really mindful that open banking and consumer data sharing has come about for the benefit of the consumer. So the technical standards need to look out for them. So this can be through giving them control of their data, saving them time, or just having more options due to the increased competition that things like open banking enables. So I think when we're making technical decisions about what the standard should look like, the customer experience needs to be considered jointly alongside that. So what things do we need to build into the standard to create a great experience? What things in the standard could cause a poor experience or friction or delays for the user, and how do we mitigate that? So I think those are the things that really spring to mind for me first when I think about the technical standards, is making sure that that customer experience is throughout that journey of building the standard up and making sure that we're considering what that will look like for the customer.
Thanks. Hugh, let's go to you next.
Yeah, no, thanks, Tom. By the way, I love the analogy. I'm gonna have to reuse that one. And Amy, I do completely agree. I think this has to be focused around how do you create a great user experience. But the anatomy of the standards that you were just talking through all feed into that. I think one of the really important parts of the standard, and again, in the experience in the UK, we sort of broke it down into a few elements. So as you outlined, there's the security layer. How do you make sure that there's a common standard for how the two parties, the bank and the third party, connect, establish trust, create a real secure link? Now, to be honest, this is beyond banking, and I see Don Thibault was on the the attendee list, and groups like the OpenID Foundation have been looking at sort of leading a charge in areas around things like the security standards. But then you've got the component around consent management, and as Amy was saying, this is all about actually consumer or user focused propositions and making sure that there's a really well defined approach to how consent is granted, is managed. There are regulatory considerations here as well. So actually in some markets there are data protection requirements and there's regulation that needs to feed into that, whereas in other markets it's more of a commercial play. Then, as you said, there's the how's the data structured, the data payload, but all of that combined then feeds into the end user experience. And certainly one of the things that we saw right at the beginning in the UK is when there wasn't a well-defined standard around customer experience, and when the customer experience guidelines didn't exist, the best possible description was it was inconsistent. The more accurate description is there were some horrible experiences. It really needed some strong user experience guidelines and standards to make it work and really unlock the potential of open banking. So yeah, I think thinking through all of those components of the standard with a end user in mind is really critical.
Thanks. Rami, give us your thoughts.
Absolutely. I think I'll add to the points that Amy and Hugh made. The client experience is paramount in underpinning a global interoperable standard that will stand the test of time. And I think that's the thread I'll take this answer into is thinking about this as a durable standard, or really underlining the word durable. Durable, it will withstand time. It will be a carrying vehicle for global collaboration and adding to the academic discipline and really building the standard in terms of its fidelity, its robustness, how wide it covers in terms of user experience domains and different technical domains. And I think that really is what creates for me the kind of underline around a global interoperable standard, is that it becomes that carrying vehicle for a international set of collaborations that advances the cause in a material way. Anytime we've seen standards become incredibly narrow, incredibly overly focused, and with minimal interaction from the multitudes of the industry participants, the standards have either been very narrow or have simply not withstood the test of time. And I think that's our obligation collectively as parts of the global community, is how to make this a durable standard, and an international one at that.
Yeah, no, thanks. I appreciate that point. It's a perfect tie-in to maybe the next question that dives a little deeper into this question, narrow versus wide, interoperable versus maybe stovepipe. So I guess my question for the group, Hugh, I'll let you start on this one. Should a global consumer data sharing ecosystem be approaching interoperability, or the goal of interoperability, with a single API standard? I mean, that feels like the the perfect world scenario. Everybody uses the exact same standard, but is that reality? And maybe instead, should it be a pursuit of a core of interoperability between different standards, a set of interoperable elements? Wonder if you could talk about that.
Yeah, it's a good question. It's one you hear discussed often. Now, personally, I think that it's a great utopian vision. I think it's unrealistic in the short term for a couple of reasons. Actually, one that Rami just mentioned. This whole concept of open banking, open data. It's relatively early, so to try and lock down something too tightly, I think you potentially miss a huge amount of opportunity. We'll see, and we're seeing right now markets evolving in very different ways. We've got some markets driven with a real regulatory catalyst. We've got others driven much more of a commercial catalyst. It's driving out a huge amount of innovation. So I think getting to one single standard quickly is probably unrealistic. However, that said, I think fragmentation is bad. That makes everybody's life difficult. Engineers and talented engineers are a pretty scarce resource. So if organizations have their expensive engineering resource focused on figuring out the plumbing rather than building value-adding propositions. That's not a great outcome. So I think fragmentation is bad, creates a lot of inefficiency. Interoperability clearly has to be a goal, but I think it's interoperability rather than a single standard in the short term. At Ozone API, one of the things that we do is we help banks handle the complexity of standards. We help banks deliver standards-based APIs and handle the complexity around this. I think that's going to be with us for a while. If I look at markets like Brazil, for example, the scope of open banking, which is sort of being rolled out in the next 12 months, is much broader than the scope that we've seen in Europe through PSD2. I think ultimately we'll end up with a similar full open finance scope, but we've got two regulatory driven markets with very, very different scope. And you need the space for those, I guess the data models to develop in line with the breadth of the financial services industry, but as long as it's done in that interoperable way, a bit like we've seen with ISO standards within the world of banking. There's a way of doing this in an interoperable way without sort of locking down the potential by trying to create one single version of the truth, I think.
Yeah. Rami or Amy, want to add to that?
Yeah, absolutely. I'll jump in. I think Hugh, you hit the nail on the head in terms of, I think I often describe it as diffusion. I think the enemy of progress will be in diffusion, and diffusion in non-value accretive capabilities or value creating activities. At the end of the day, if we're spending that valuable resource collectively, all of us in the entire ecosystem, really trying to connect the pipes as opposed to creating valuable use cases for the end consumer, the end businesses, we've lost. I think we've lost then the focus on sort of the true North Star of what every geography, irrespective of regulatory bend or not, when we began this activity. So I think that's one area of focus that we'll need to kind of be mindful of. I think we always ask the question of how are you creating value and where is that use case going to emerge? We're so early in the process that I believe it's premature to narrow the aperture. I believe we will frankly erode the opportunity to innovate, iterate, and bring additional robustness in terms of the international ecosystem if we narrow the aperture too prematurely. And that is going to be probably the largest topic we will all have to contend with, which is how wide to keep the aperture, and yet at times how to get narrow and get convergence so that we don't have diffusion. And and that's where the global community is going to really lean in and define the path forward.
Terrific. Amy, you want to add anything to that?
I guess quite similar to Hugh, my first instinct was interoperability is probably the most sensible and practical of the two. I think if you think about the authentication versus the data payloads, I think some of those parts are easier than others to be interoperable. So if you think about the data payload in particular, from our experience, trying to get a single API across all banking landscapes globally just seems unrealistic. We've seen even in individual countries like the UK and Australia trying to abstract away complex banking constructs and come up with like a one-size-fits-all data payload. We've just ended up with a whole lot of optionality, and it makes it really hard to consume and know what to expect, and it makes it hard to tailor experience for the customers if you've got 50 different optional fields in the data payload. So, things that maybe should be mandatory in some regions and not in others. I think about like checks, for example, which most of the world is starting to phase out. Half of the banks here in New Zealand don't accept checks anymore, but in the US they're still big. So if you think about a consumer in the US, they would absolutely expect that check fields would be mandatory, but you're not going to expect that here. So my thinking is maybe there's a combination. Maybe there's some opportunity for global standards across the authentication side, but maybe less so on the data payload side.
Really helpful, and we'll explore that a little bit more here in a couple coming questions. But Rami, I want to ask you specifically, a little bit about FDX Canada. For those on the webinar that don't know, Rami and RBC, along with a host of other FIs and fintechs and parties within the Canadian financial data ecosystem, launched FDX Canada this summer. And to me, this is a perfect example of what we're talking about today in terms of the pursuit of interoperability versus just maybe building a regional, or for you, a Canadian standard from scratch. And I wonder if you could tell us a little bit about how that group came together, how you picked FDX, and where have you seen the value in maybe aligning towards interoperability, again, versus kind of that build your own approach?
Sure thing. As you mentioned, a number of organizations across the Canadian ecosystem came together and began having a number of dialogues about how we were going to facilitate elements of consumer-directed finance and do it so safely and elegantly, and really address a lot of the questions that we were all commonly grappling with. And as much as the patriotic heartstrings were pulling at us to create a Canadian standard, I think practicality in the end, and a much more, sort of evaluative process really led us to thinking about this as a wider ecosystem. When we began thinking about it as the widest ecosystem, many of our partners, many of our suppliers, many of our value accretive organizations that would be bringing innovations into the market had an international footprint. They were not restricted to a singular geography. And for us, it became really a discussion about how do we and which parties could we work with that had that similar North Star vision of global interactions, global interoperability, but also allowed the flexibility to deal with local jurisdictional and local nuances that were critically important. We obviously have many nuances in the Canadian ecosystem that need to be tailored to a multilingual country, being the least of the number of things we have to deal with, even terminology differences. To Amy's point, we also have checks. Quite a lot of them still. We take that from our American cousins. But we also have other products and a privacy scheme that really closely mirrors Europe. And so it was becoming quite evident for us that the best path forward was to contribute to the global ecosystem and really lean into the international body of knowledge and help bring our elements to it, but leverage where the path has already been paved for us by the innovation and the iteration of others before us.
I really appreciate your distinction there. This was not just an easy decision. You had a lot of considerations that made you think about this decision, and I think it really underlines your approach towards interoperability. And so kudos to you and the group. I know that's already growing under FDX Canada. Exciting to see kind of how that develops. I wanted to move Amy to some of your experience at Xero, since I know Xero operates in a bunch of different markets around the world. You and I talked about this a little bit in the prep session, but I wonder if you could tell us a little bit about your experience with data sharing standards and seeking kind of that global customer experience that's consistent, some of the opportunities and some of the challenges you've seen when it comes to implementing solutions and hoping that a standard is truly a standard.
Sure. So I guess, yeah, you mentioned it, but for us, the ideal is that no matter what country you are in the world, that our customers are having a consistent experience that's kind of really beautiful to use and seamless, and no matter which bank, merchant, or fintech they're trying to connect to us, that it's the same. So quite often we're particularly now, we're seeing businesses often have bank accounts across countries. They're a merchant, they sell things. So having a process that can look and feel the same to the customer, even if there are variances under the hood, that we can create that same experience for them. So I think one challenge we've had, even in a market with a pretty robust standard like the UK, is that where it's not mandatory. So in the UK, it's mandatory for the big 9 banks, but not the rest. So when it's not mandatory, we see quite a lot of variance. So while there's really low friction to connecting these big institutions to Xero, there's quite a lot of friction for the smaller ones. They make decisions to deviate from the standard that they think are quite minor, but as a consumer can actually make quite a bit of difference. So it kind of means that they get left behind a little bit. So we have to make trade-offs and decide that this variance is too much to cater for, so we're not going to connect, which means the consumers of those smaller fintechs get left behind because we don't connect to them. So I think it does create potentially a little bit of technological advantage, I guess, for the bigger companies that can pay for the consultants to come in and implement these technologies and maybe leave some of the smaller credit unions and fintechs behind. I guess another thing we've come across in the UK is that global banks. So sorry, lost my words there for a minute. So if you think about, I think RBC is probably a global bank, aren't you, Rami? So if you think about customers that you have globally, like our ideal is we connect to RBC. So we don't connect to 5 different versions of it. So this is where global interoperability or a global standard would be great, because we can connect to that bank, and no matter which customer and which country we're connecting to, we can just connect all those customers from the outset. But if there's different standards, then the bank has to maintain different versions of their API that do pretty much exactly the same thing across those different jurisdictions, which we have seen starting to emerge as several countries start to bed down and on their own standards, that we're getting these versions of APIs that do the same job but look completely different.
You really brought in some key points there. We just did a webinar a few months back on the what a standard does for the small players. So whether it's a small financial institution or a small fintech, the value that a common standard brings to lowering the barriers to access and leveling the playing field a little bit, especially when you don't have the legions of engineers or consultants to make this work for you. And so I do think that's an interesting question. Maybe we can probe that a little deeper here towards the end of the webinar. But I wanted to move over to Hugh. Hugh, you've been a valuable asset in the FDX ecosystem, given your experience with OBIE in the UK. And I wondered if you could shed some light on the approach to interoperability in a regulated environment. This is maybe the pink elephant in the room of, none of this activity is happening in a vacuum. Different jurisdictions have different regulatory environments and approaches to this. And so I wonder if you could talk and maybe if you could add some specifics or some 101 on the UK model, where you've seen the benefits and the challenges when an API standard is driven by regulation versus, say, by the industry or the ecosystem.
Yeah, that's a big question, Tom. So let me try and I'll cover off some of the key points. I guess as context, so in both the UK and Europe, it's open banking has been very much driven by regulation as a catalyst. Actually, the UK is a bit of a perfect storm because you've got some UK regulation from the competition regulator, and you've got this European-wide regulation called PSD2. Broadly similar, but slightly different. Interestingly, across Europe with PSD2, there's a requirement for banks to open access to these authorized third parties, but it doesn't require necessarily APIs to be that interface. It doesn't set a single standard. So right across Europe, you've actually got a huge amount of fragmentation. There's a whole bunch of different standards emerged. So there's the UK standard, there's the Berlin Group standard, there's STET in France, the Polish API standard. There's really far too much fragmentation, and that's to the detriment of the ecosystem. I think what we've seen in the UK is a well-defined standard that is implemented more consistently across the board helps absolutely accelerate the ecosystem. So in the UK, the competition regulator required the largest banks, so the 9 biggest banks, all to work together and with the implementation entity. And I was fortunate enough to spend some time there sort of leading the development of the ecosystem. But that group developed a set of standards, and the UK open banking standards sort of been used in a number of other, as a foundation in a number of other markets around the world. But what it meant was pretty much all of the banks in the UK used the same standard. And I think we saw the benefit of that. Whilst only 9 banks were mandated to use that standard, pretty much everyone else did. And what it meant was the open banking ecosystem in the UK grew far, far quicker than the rest of Europe. So there's about 500 million API calls a month now in the UK. That outweighs all of Europe put together. The market has developed much more quickly. However, it still isn't a sort of perfect environment. There's probably a couple of learnings that came out. So one big consideration is where it's driven by regulation. Often the mentality then is with regulation as a bank, and I spent well over 20 years as a banker, quite often regulatory projects, you have to do them. What's the minimum that we have to do to tick the compliance box? Now, the minimum doesn't necessarily equal great. And for a bank to really build strong partnerships and great user propositions, whether that's for consumers or SMEs, actually those API interfaces need to be high performing, they need to be available, they need to deliver a great user experience. That doesn't necessarily align with doing the regulatory minimum. So what we saw at the beginning was the first deployments were okay, but inconsistent user experience, not necessarily great performance and availability. Actually, the regulator through the implementation entity then stood up and worked with the banks to say, we need to have a common standard around customer experience. We need to implement better. And that led to a significant uptick in usage. So I would say the regulation created a great catalyst. A common standard helped accelerate the market further. But the downside, the challenge with regulation is the mindset can be, I need to do the minimum required, whereas this is such a fundamental part of the banking business model moving forward. It isn't just about mobile, internet, and branch anymore. It's about how do banks engage with the world to get their products and their services out in new and innovative ways. They've got to be great. And where it's driven by regulation, I think that the challenge and the opportunity is there for banks to actually look way beyond that and deliver something much better. And we're starting to see that move now. But that's certainly a bit of a tension there in the market.
Yeah, well, I appreciate you kind of illustrating that. And I want to broaden this out as well, Rami and Amy, to get your take on this question of kind of regulatory standard or regulatory driven standard versus an industry standard as it relates to interoperability. And, I think I want to be clear on 2 things for the FDX side of things. One, FDX as an industry ecosystem standard, we believe that the industry is best suited for technical standards work for a lot of reasons, and the fact that it does include the entire ecosystem. It's not just the financial institutions, it's not just the fintech side, it's truly that collaboration between the two, and to see how far you can get in a standard. Where can you get that agreement across the body? But I wonder, Amy and Rami, if you can comment on this. The technical standard side, not obviously there's a myriad of policy issues that we don't deal with. We try to stay very focused on the technical, but wondered if you could come in on this question. Rami, I'll start with you, and then Amy, interested in your thoughts.
Thanks, Tom. So I'll definitely stay clear of the policy, because otherwise we'll be here for, I think, the next 12 hours. I'm gonna riff off of where Hugh started. It's absolutely, I think, the right way of thinking about it. I think the UK experience highlighted some successes, but also highlighted areas to be careful of and areas to think about and accelerate past. The question I kind of go to is, are we trying to hit a minimum standard? By very nature of the definition of a regulatory standard equals penalties or equals some repercussion for not meeting a certain threshold. And immediately it could potentially have the unintended consequence of pulling the motivation for innovation, collaboration, as well as the ability to fail with limited repercussions so that we can advance the innovation cause. Failure in a regulated scheme tends to have very punitive implications on the participants, and it doesn't really set the groundwork for industry collaboration. The risk protocols and the risk appetite diminishes and the risk protocols go up, and therefore everybody tends to meet the minimum that's required, as opposed to really advancing the cause and being okay with maybe failing a few times to really advance the total innovation agenda. I often kind of what I often go to is math homework is mandated for my kids, and they set the lowest bar possible. But when it comes to lacrosse or hockey, there is unlimited bounds of imagination and how many hours they put into practicing. The difference between a mandate versus equal participation, where there's an equal give-get for parties around the ecosystem. That's how I tend to think of this.
Well stated. I look forward to working on an infographic with your kids with their math books and their lacrosse sticks for the future. Amy, do you want to jump in on this question?
I think our observations at Xero just mimic what Rami and Hugh said. So we just find in industry-driven markets that there's more emphasis on the customer. So if you think about the data payload, we find in regulated environments, we get the bare minimum, like sometimes even less than the transaction information you'd see on your online banking. It really is just scraping through to meet the requirement and not kind of thinking holistically about what problem it's trying to solve. And we see the same with account types. In the EU, there's this concept of a PSD2 account, which is a payment account, which excludes things like loans and some sort of savings accounts. And we see that interpreted quite differently. And there's definitely consumer demand for things that don't fit in that clean definition, but we don't really see a lot of appetite to broaden horizons on some of that from in the regulated environments, both from they have to do this API. They don't want to do anything more than they need to, but also from we're scared that we're going to do something that the regulation says we're not doing. So that kind of has its own sword there, double-edged sword of like, can we do it or not? I think banks are starting to catch on to the benefits. We've seen a lot of banks starting to create their own experiences in online banking that draw on accounts that are held with other financial institutions. So I think this concept of you're going to do all your banking with me and I'm going to keep you locked into my ecosystem is starting to change across the globe, certainly from our experience. But yeah, I think definitely with industry led, we see more emphasis on the consumer, and we see these things standing up for the benefit of the consumer rather than just because they have to.
Yeah, appreciate that. Go ahead.
Just one minor point. So no, I agree with that, Amy. I believe whether a market's driven by regulation or it's driven by market forces, I think at a point in time in the future, they'll probably look pretty similar. I mean, what we're seeing in the UK is a lot of the banks, they're past the compliance project. They're now investing in commercialization teams. They're looking at all the really cool things that they can do. It's going to take them a little while, but they're going to get there. Whereas markets like Singapore, where banks like DBS started with very much a commercial agenda, the regulators follow up, standards start to become important. There's probably a point in the middle that gets reached. It's just a question of what's the catalyst for the ecosystem? Is it a regulatory catalyst or is it a few market initiatives? But I think we'll end up at the same place, but you have some different bumps along the road depending on which side you start from.
Yeah, so I'm gonna riff off of you. Yeah, I'm gonna riff off of you there a little bit because these are excellent points. I think the question we end up asking ourselves is, how do you use a standard and how do you argue for a path forward in a particular geography to create the best conditions for creativity and handling business ambiguity, to drive value, a creative business, a creative value forward. Wherever you take those two dimensions away, then it simply becomes a meet the checkbox exercise. And all that does is simply delay the time horizon to achieving those two end outcomes. Hugh's absolutely right. It's a question of time, and you'll get there, and the market will eventually get there, and they'll look fairly similar. It's a question of the accelerated time dimension to get to that. And to bring it back to standards, technical standards really support, having that conversation in a fairly practical, methodical way that, creates really a common playground, irrespective of size.
Got it. Super helpful discussion on that. I wonder if we could pivot back to maybe some thoughts that we had earlier. We've talked quite a bit about while maybe perfect world solution would be a total global standard, everybody's on the exact same thing. It may not be feasible, at least at this stage, and yet it's also early, and so let's leave room for that standardization of standards, if you will. I wonder if we could talk just a little bit more on this question of the elements of a standard, if we could get a little granular, that truly need to be interoperable, and where there's still room for some regional differences in a standard. And maybe I'll go ahead and ask the follow-up question I have so you can be thinking about it, which is, is there ever room for a proprietary tailoring on top of a standard? Like, is there a part of a standard that there can be proprietary differentiation without essentially defeating the purpose of having a standard, kind of to some of Amy's points? So where do we need the interoperable layer to kind of be consistent across the board versus regional tailoring? And then is there room for any proprietary tailoring without it defeating a standard in and of itself? I'll start with Hugh. I'll give you this first one.
Thanks, Tom. So I think we've talked about the layers of the standard, and I think kind of interoperability around that security layer. How do participants connect securely, establish trust, ensure that the integrity of the ecosystem is secure? I think it would be crazy if that looked different everywhere. That would create too much non-value add engineering work in the ecosystem. I think this question around, again, there will be, as we talked about, as you look at different financial services products and different sort of, again, tax regimes in markets and things, there'll be differences around the data payload. And I think that's okay as long as that library over time builds up in an interoperable way. There should be a lot of consistency and some points of difference. I actually believe that if the standards are built in the right way and interoperability is sort of well considered, I don't think there should be a huge amount of need for really genuinely proprietary stuff. And that might be a vanguard to take the standards in new directions. So I don't know if there's not a huge amount in the trade finance space and something proprietary then becomes a standard, for example. But if again, many of the commercial use cases and the differentiation will be different ways of combining data activity with a well-structured consent experience. So I'll give you a very specific example. The regulation in the UK and Europe on the payment side is really around single immediate payments, and you give authorization and authentication to make a single payment. Whereas on the data side, it's an ongoing access. Actually, a well-structured standard with the ability to build rules into the consent allows you to build a whole bunch of different payment scenarios for frictionless payments, the Uber type experiences, regular subscription, supplier initiated payments in the B2B environment through a common set of building blocks or Lego blocks that can be built into a consent model that, again, it looks similar to the third parties. The banks can start building really interesting commercial propositions around variable recurring payments, supplier initiated payments, all of this sort of stuff. Similar with identity attributes. Banks can start making these available with levels of assurance. And there's loads of stuff that can be done to create really interesting propositions that can be done without the creation of real proprietary stuff. So yeah, there's probably a point where it might be great to be a vanguard into a new area, but this done well, it should be based on standards. It shouldn't be proprietary, in my very humble opinion.
Rami, you want to take that next?
Yeah, I mean, I think of it a little bit programmatically on this one. Areas that create utility. We all get efficiency by doing it in the same way. There's really no mileage in having kind of your unique thing, except for pride of design or ownership. areas of commonality. We want common experiences. We want consumers to not have to figure out UIs every different way. Is this a proper consent, or is this a phishing site, or something of that sort? And areas that you need to establish consumer and party confidence. You need confidence in the system. For a standard to be enduring and lasting, there has to be trust and confidence in that. So I look at those three sort of large blocks, and I believe those really need to be interoperable, singular standard, or some significant interoperability that underpins all of that. Unlike Hugh, I think there are sometimes cases where you do need to tailor to some level of proprietary, but the bar will really need to be established quite robustly, and that is on the participants in this ecosystem to really establish that. There are local unique differences in certain geographies. We are one where we have certain uniquenesses, but that does not mean we really are going to build a standard from scratch, as you know, Tom. But we do have certain things that are uniquely tailored. I believe in them as overlays or top-ups to a standard, as opposed to a complete new standard. There's also the case to be made in future innovations, if there is a commercial party that has advanced the cause and the thought leadership so far ahead of everybody else, and they want to lean into and add their components to the standard and therefore advance the cause of the standard. But I don't look at that as a proprietary thing. I look at that really as all of us agree on a practical path forward by advancing the cause materially, and there may be some proprietary and commercial elements to it.
Thanks. I really like the distinction there on that. Amy, I know you already touched on this, but wanted to see if you had more to add, or where do you see, if any, a place where any tailoring could take place without messing with a standard?
Yeah, I don't have a lot more to add, Tom, but I think when I'm thinking about the interoperability, I'm thinking about the technical frameworks that already exist. So if you think of OAuth 2, for example, like follow the RFC, like build OAuth 2, don't build an OAuth-like variant, and then you kind of get interoperability for free if everyone just follows those existing frameworks. For us as a consumer, it's definitely the authentication and security side where we see the most variance, and it takes the most time for us to cater for any tailoring that happens. So consistency on that bit is probably the most important for us. But yeah, I think it kind of feels a bit like, and this may seem harsh, but a failure of the standard if the people who the standard is intended for can't use it. So for me, I kind of with Rami there, if the standard is missing something, then maybe it needs to be amended or added to make sure that it does cater for the scenarios that it needs to, because if it's happening for one provider, it's probably going to happen for another. I think there are very few actual uniqueness across at least my experiences of banking that won't impact a segment rather than an individual institution.
I'm already working on a line of merch here for FDX, just a T-shirt. Don't mess with the standard, maybe. All right, I've got one more question in my list for the group. I'll just remind our audience, we just have about 10 more minutes. I've got one question in the chat, but if you have others, please just send it to me privately. We'll see if we can get it. But I'm going to ask you each to name one, the biggest challenge facing global interoperability for technical standards, and then what is the biggest opportunity, or what's the thing that gets you most excited about standardization of consumer data sharing standards? Rami, I'll start with you.
Biggest worry? Diffusion. Spending the next 2 to 5 years, 6 years, really trying to bring commonality of definitions and a few standards together. The biggest opportunity is again really stepping away from the standards debates and policy debates and starting to get to value accretive use cases for the consumer, whether they be personal or business. And again, to Hugh's point, advancing this trajectory that we're on. I firmly believe we're all going to end up in the same place. It's just a question of timing.
Got it. Amy?
I think the biggest challenge that sprung to mind for me was regulation, actually. So in markets that are already regulated and have to be honest, quite specific regulation about how the technical standards will be implemented. So it'd be hard for those markets to adopt a new globally interoperable standard if they've already locked in to something. So I think that would be a challenge that would need to be overcome. And I think biggest opportunity probably is just to share lessons. So globally, we're in different parts of this journey towards open banking, some much more ahead than others. And I think by having a global sort of working group on this, you can sort of hive mind the as each geography goes through its journey, iteratively, continuously improve the standard so that it gets to a point where it truly does work globally.
Thank you. And Hugh, I'll give you the last word on this.
Well, the danger with the last word is it starts to sound a little bit repetitive, and we've definitely got that risk here because I'm in wholehearted agreement. So yeah, I think the challenge is what parochialism occurs, and whether it's markets or regulators or banks looking at, well, we should do our own thing just because we can, and actually where differences are required, then that should be contributed to an open standard. So I think, the fragmentation and the parochialism is the challenge. The opportunity, I absolutely agree with what Amy and Rami said. Actually, the thing I get most excited about is when this really starts to unlock the potential to see how it could actually tackle real, genuine issues in the world, things like financial inclusion, things like unlocking cash flow for SMEs, stuff that the right foundation will unlock a whole amount of innovation that will genuinely have huge positive impact on the world. So that's the bit that gets me out of bed in the morning.
Got it. Great answers. Got a couple questions in the chat I want to hit if we have time. We've got just a couple minutes left. This one is pretty technical, so if any of you can jump in, that'd be great. Question is, would ISO 20022 solve the data payload problem for consistency? Not sure if any of you have familiarity with that standard, but if so, please speak up.
So I would jump in and I would say it's not a deep knowledge, and so I will put that. I'll preface that information out there. I think that the 20,022 messages and message types in the data packets that do come with that have a fair amount of representation, but they do not represent, I think, the totality of use cases that you could envision in consumer-directed finance. And once it goes outside of certain other proprietary schemes, it sort of starts to have some waning effects and doesn't represent certainly the totality of use cases. I can specifically say within, for example, the Canadian market, we have some very unique financial products when it comes to the lending businesses, the mortgage businesses, things of that sort. And our only recourse at that time would be to really go down the ISO body and try to get those adopted more internationally. And so we are actually a particular geography where we are working with both sets of standards, and we're actually having a conversation about how they dovetail with each other and how we can make them practically work in consumer solutions. So I don't think they would be at odds with each other, but I don't believe it has a complete set, but I could be proven wrong otherwise. And that's the danger with something so technical and so deep a question. But it's a great question, and it's gonna lend me to go do a bit of a deeper look myself.
That's right.
Yeah, I think it would certainly help with interoperability and ease of consumption, but would we actually get the consumer outcome at the end is where I would worry. So will it make it easier? Probably. But would we lose sight of the customer and what they need and what data is important to them? I think that would be very easy based on what Rami just went through.
Thanks. All right. I think we have time for one more question. This is, what about open insurance? And I think what's interesting about this question as you think about it is we often talk about it, the financial data exchange. Obviously, the real focus of the FDX API is consumer financial data and as broad elements as we can get within the ecosystem for that topic. But really what we're talking about pretty soon is open data, right? Broadly open data. And so would love just to get your take on maybe this open insurance question, but then to the extent that you see kind of the work that is happening in the financial services arena paving the way for kind of other consumer data sharing.
Yeah, I mean, to add a couple of thoughts on that. So what about open insurance? I think really interesting and absolutely inevitable. I mean, the UK started with open banking regulation. There's now consultation around open finance. So looking at a much broader set of financial services products. As Amy said, the scope's a little bit limited at the moment. I mentioned earlier the regulation in Brazil. We've got a lot of activity going on in Latin America at the moment. Now, the scope of regulation in Brazil is full open finance. So it will be pensions, mortgages, investments, insurance. And if you think about the insurance environment, I mean, all policy decisions and premium decisions are based on data, understanding, the ability to kind of leverage that access to make more intelligent, more innovative insurance propositions. It's a great opportunity, and it's part of the whole the financial portfolio of a customer. So open insurance, I think inevitable. Open finance, inevitable. It's the same question. What's the driver? Is it regulation, or is it just the market getting there?
Thanks. Amy or Rami?
Yeah, to build on to what Hugh said, I've never been a fan of the word open, fill in the second word. I think it just never, it's always been, I've always been averse to that wording. I think I like to think about it as consumer directed and fill in the last word. Consumer directed finance, consumer directed healthcare. How many of us want to actually be able to really direct, the health, especially, when you start to go into spaces like care for elderly parents and things of that sort. So I think this is really the consumer-directed phenomenon that is happening and taking the world over, and we all have very different and unique responses to it. And I don't believe any sector is immune from it or should be. It's a question of timing and the burning platform and which geography goes first on any particular topic. Banking does elicit, I think, one of the first early reactions usually, but that's how I think of the topic.
Yeah. No, as a messaging and communications guy, if we could standardize the terminology we all use for consumer data sharing, open banking, open finance, connected banking, consumer-directed finance, I think we would be in a good place. Amy, any final thoughts on that question from you?
Just over this side of the world, we're seeing in Australia, for example, their open banking equivalent program called CDR is including things like the energy sector. So bringing more competition to that sector where the energy companies share out their pricing and structures so that apps can pop up and help you find the best retailer for your needs. So we're definitely seeing over this side that open data is expanding well beyond just financial services, and in some cases before financial services.
Yes, thank you for that, Amy. We are right at time. So I just want to thank our panelists, Rami and Amy and Hugh, really just an exciting conversation. Excited to pick up a lot of the pieces that we discussed today. And for those that joined us today for the whole webinar, really appreciate it. Look for our next quarterly webinar sometime in December. And otherwise, follow us on Twitter and LinkedIn. Come take a look at our website and come join us at FDX. We look forward to our next discussion. Thanks for joining, everyone. Hope everyone has a great day.